to for somebody else.
And how do you get Nobels?
Elliot.
Oh, Elliot as well. Elliot is famous.
You have the power.
It's a brilliant plan.
It's really nice. Yeah? Yeah.
Yes.
That's what it
Yes.
is.
Sorry. Yeah.
And you told me you were doing
Yeah.
That's it.
So I did the March this camp, I think.
Oh, yeah.
I think March it.
Yeah.
After that, March because busy, but I'm also moving. So,
Yeah, he's doing the same thing. What did you used to do before again?
I used to work for the Bank of India.
Then-
And I got to know through you.
Oh, yes, yeah.
And then we did the AOL. Yeah.
We went to the same meditation course, me and Nat. Because I follow the Art of Living, in Trader Space, can I show you this picture of Art of Living where there's 2.5 million people in one place where they meditated together. They broke 4 Guinness Book of Records. You know, one of which was the least security ever needed to maintain so many people in one place, right? Because it's all kind of peace. So even for a small music concert, you find a lot of police and security, isn't it? I mean, but over here, 2.5 million people. Yeah, so, and that was the guys that I followed. So I was going on the advanced course. So it was like a silent kind of meditation for 5 days, you know? And that's where me and Nat met. It's incredible. Sabita, look.
My name is Sabita. I've done September-based camp. I'm pretty much used all of this. And how did I hear about this from another program, Supercharger Life with Skip in April. So that's me.
And what did you do?
I'm a nurse. I work for a general practice surgery.
That's recently, yeah.
That's full-time mum.
Okay.
Amazing little girl.
Yeah, phenomenal.
Who's out here? Okay.
The doctor's incredible. Yeah, so smart.
genetics.
Did you ever know the surgeon in the surgical business?
No. I'm a nurse practitioner. Years ago, I started off as a general nurse. I was qualified as a nurse, but worked my way up, right? And then I ended up in general practice.
General practice.
Yes, I'm still community-based. Up until present, I still do part-time with Wandsworth Community. Thinking about you never know it. Actually, tonight there's a big meeting going on because George's is splitting up. Yeah, they're losing the community space and there's a lot of changes, so we don't really be able to support the team anymore. So I'm going to replace that income.
It's interesting because recently we were in the surgeons exhibition. We were exhibiting that just on the weekend, Friday and Saturday. A lot of interest, because most surgeons, they are cash rich, but they're time poor.
Yeah.
So when we came to our stand, we had a nice little game going on as well, so we did that as well. Yes, everybody's predicting where the price was going to go. So you all get very excited because the price was essentially we just got the winner today. Leslie, I think Leslie. Was it about few of
The
them?
one I signed up.
Was it you?
No, I'm not.
Was
In my
it?
list.
Alright, did you get an email already?
Huh?
You checked the email already?
No, I just remember trying to. I did get a Leslie in my
Oh,
list.
right. There's only a few guys who got it right. Out of 400 leads that we got.
Right.
Yeah, so there's not that many. That's good. So very finally, we were just going around the table saying, just say a bit about yourself.
Okay.
And then how do you get Nobels and what do you do?
Okay. For me.
Yeah.
Okay. My name is Sabir Vivakas. I am a full-time trader now and a full-time guide as well. And I started trading in 2010. Traded with a different company called Knowledge to Action. Then by then I had two businesses. I not failed, I shouldn't say, but it didn't work out. But I was still looking away. I wanted to be financially free. And then I joined a different company called Knowledge to Action. Did courses with them. And I met someone there, and then he introduced me to Masters of the Market. And then from then I did some course and I learned trading for 4 years, and now I am a full-time trader.
You got to know through your friend.
So
So,
I met him there.
I used to coach his friend.
Oh, yeah.
Then his friend knew about us and he spread the word to some of his friends and then started with him. In fact, the interesting thing is, when we first started, actually, we had Traders Basecamp. At that time, I don't know if we called it Traders Basecamp, I don't remember, but we had Traders Basecamp on this weekend, but we postponed it. So then, a lot of people went to the second day, but Sabir couldn't make the second day, so he said, "Can I still come?" So he was actually our first client. I was only one person in Traders Basecamp. Yeah, so that's how it all began actually. Yeah. And then after that, I think he carried on for a bit, but then of course then he had things come on in his life, and then he had to drift away, but then he came back again after 2 years. But it's really good. He's always been so determined. It's incredible. That's most important anything about success. Determination. Okay, good. So that brings us today. Most of you know me anyway. So how did I get over Master Markets? Well, I found it anyway. But I got the inspiration to make it happen. I do talk a bit about that. Okay, so today, what are we going to do? So, as a mixture of newbies and few intermediates. So I thought maybe we can do a bit of dynamic breakout strategy. Anybody know about dynamic breakout strategy? Yeah, bit here and there. Yeah. Oh, okay, yeah. So I'm sure. Okay, you can take the.
How are you doing, Clear?
I'm very good.
Hands are slightly wet.
Please.
How's it going?
Yeah.
Can you squeeze? Yes, all right. Yes, thank you.
Hello. How are you? Good to see you.
Yeah.
As if you were an expert now. How are you doing? Good, good. Someone say
How you doing?
How you doing, bro? You're nice to see you.
Yeah, put the camera behind.
Yes. Yeah.
Okay, good. So as we were going on, we'll do dynamic breakups, right?
Did we have a thing with the last person to get advisor for dinner?
Oh, fantastic. I'm hoping someone else comes.
That's it. The little orange light should come.
Yeah, green light.
Yeah, green light.
Got it.
All good to go in that case.
Look at that.
Have fun, sir.
So well done.
How's it going? Yeah. Busy market?
Very busy at the moment.
Okay, so we will do a quickly dynamic session. So as I'm writing this on the board, we actually did a very quick run just in case some of you are wondering who's this guy who just walked in, he's so late, he just did all of us. So you can just introduce yourself, you can tell a bit about yourself, and also how do you get to know about us.
Okay. My name is Eamon, and I'm a consultant, HR consultant. I also run an event which Thilo recently spoke at, which was fantastic. And I met Master Markets at a group called Yes Group, where they advertise and got to know them, and I went to the, the boot camp, the 2-day boot camp in April, base camp. That's it.
Do you know anyone who set the same base camp as Ian?
Yes.
Oh, you Stephanie.
Yes, definitely. Yeah, and obviously you were there as well. Yeah.
Base camp, but
Just again.
I was there.
Oh, yeah, they help it out.
So basically, we always follow a three-step process that most of you who come to the sessions you will know. We'll talk about one topic, so today we'll talk about dynamic breakout. Then we'll talk about application of that strategy into the market. And then we'll look at Q&A. So, dynamic breakout is one of the three strategies in the live trading room, right? What are the three trading strategies in live trading room? Lift off, price run, and dynamic breakout. Yeah, that's the third one. So, lift off is usually the first one we usually analyze in the live trading room, and the second one is the dynamic breakout. Just a very a quick recap about lift off because we went through it in the last session. What is the whole concept of the lift off strategy? I mentioned it. The all end of day strategies, which is good. Yeah.
Confirmation bar going higher or lower than the 20 moving average.
What about the confirmation? It's close above, no? Yeah,
Yeah,
cost
so
above
what?
20 and then
Yeah.
cost above. What was the concept? Remember I talked about this last week, the concept? Stephanie?
Yeah, because it was like you join the US flow when it's like it's information. You have that guidance to the movement average. And that's what you use.
Also, there is one specifically I'm looking for. What is it? No? What was I was telling you just now? Sorry. No, we always look for it to go below 20 because we want the
But the cheapest.
You want to get the fairly going long, you want to take out all the people who are behind the.
Yeah. So basically, it's simple concept. I'm not going to go into detail because that's in the previous session. All the videos are uploaded on YouTube. You can check it there as well. But basically, we want the stops to be taken out. Yeah. And 20. Basically, it's all about, as a buyer, you always want a cheap price. Am I right? You're not going to buy a property. You're not going to go and say if it's being offered at 500,000. You're not going to say I'll buy 600,000. No. You want a bargain. You want a cheaper price. You want to get at 420. But if you knew exactly where those sellers are going to be, if you know those sellers who will give you at 420,000, they stay, let's say, in Harrow, you're going to drive all your car all the way down there to find them so that you can buy the cheaper price. Am I right? Likewise, in the strategy, we found out that in terms of the concept, a lot of sellers for cheaper prices are behind those moving averages where the stop losses are. They're all behind what? Moving average. Because if you observe, and you even started trading, some of you have been trading for quite some time, put your stop losses behind the moving averages, right? So therefore, there's ready sellers over there. If there are ready sellers over there at such a cheap price, as a buyer, you want to buy cheap, get rid of them, wait for buying pressure to come up, confirmation above the training we made, then I get in. At the end of the day, the whole concept of any strategy that you design is that you are a fly on the elephant's back. That's all. No matter what, tomorrow or even the next 1 week, you are not going to accumulate as much capital as the institutional banks. Of course not. You're not going to get $200, $300 billion tomorrow. So what you can do though, if you can't beat them, but you can join them. So then you have to then formulate your strategy in your rules such that by observing the chart, you can then see when they're getting in, therefore then you're just falling behind their back. So therefore the concept is you're to fly behind that on the elephant's back. Okay, you're just having a ride. I think the most recent commercials that are using the elephant is the Money Supermarket, right? Maybe you guys watch TV about it. Okay, good. So now we come on to dynamic breakout. So what is dynamic breakout all about? Because dynamic breakout is also based on a very similar concept. The concept that, because remember that as I was a trader, I also used to go to different trading companies to see what they were doing. So one of them, one of these companies, they used to say this thing called trade what you see and not what you think. So don't think whether it's going too high or not, just trade what you see. And one of the strategies that they used to do was basically breakouts of swing highs and swing lows. Okay, and also one of the quants books that I read as well, they say that actually by error, sometimes the best discoveries in this world is made by error, just like how penicillin was found. Yeah. So just like that, in that trading book, it's written by error. They found out actually that if you enter on the breakout of swing highs, so basically on breakout of swing highs, right? On the breakout of swing highs, even though the entry is quite late, but however, it makes profit on a minimal level but consistently. So not much profit, a small profit gap, but it makes it consistently. So therefore, there is a nice window for you to make some profit consistently. And also on another perspective, based on the concept of swing high and swing lows. Now, first of all, even before I explain, what is a swing high? What does it mean? Remember over here at Master Markets, right? And usually, however we teach, is that you must understand what these technical terms mean. It's no point just saying, swing high, swing. That's technical terms. Anybody does that. What's the point? But you must understand how they are forming. Because when you can understand how they are forming, it's more interesting. It makes more sense. It makes more logical sense. First of all, the charts are only formed by who? the prices. Okay, who forms the prices?
People.
People, right? Human beings, right? It's not animals and dogs who are forming it, right? So it's human beings, all of us, basically trading between each other. Fun, isn't it? But so it's basically people trading between each other and therefore buying and selling that you're not formulating onto a chart. You can also formulate your own chart if you have your own business, or if you have your own sweet shop, or if you have your own restaurant. You can also formulate a chart right from the day it starts from the morning. How much did it then dip below the cash register? And then finally, to the highest price it went up to. And then finally, where did your cash register close? Right? Then you have your old Chelsea bar chart for the day. Then you keep doing it day by day, you also form a chart. That's how the chart is formed. From humans' interaction, from transactions that occur, and therefore then is populated onto the chart. But of course, to the advent of computers and machines today, this is done automatically. Somebody doesn't need to keep on plotting every day, but they used to do that in the beginning. So you must be very lucky today. So that's how those swing high and swing lows are formed, because people transactions. But then what is the real meaning? Why is that swing high being formed? Why?
Why are
There's
we
not
like-
enough.
I was gonna say because there are people willing to buy at certain prices, at higher prices, and then up to a point where nobody wants to buy higher, and then it goes down. Then you form a swing high. Did you
Yeah.
say swing high or low?
Swing high.
A swing high.
So your point is that nobody.
Up to a point, nobody wants to buy in. Like, it's not worth buying at a higher price.
Okay. Good point. So let's think about this. So basically, let's say now you have a property, or let's say, so let's say Savita's laptop. Let's say you bought it at, let's say, 500 pounds, maybe somewhere around there. Right? So now today, it's going up now to 700, somebody buys it in this room, 800, then it goes up to 1,500 pounds. Right? And what's the brand? Acer, okay. So now this Acer laptop goes up to 1,500 pounds, and you know that the average market price of this is about 700 pounds. Will anybody in this room want to buy? Nobody wants to buy? So naturally, if let's say she owns a laptop, and she desperately needs some money, what would she do? That's right, because she really needs the money, no? No, none of you want to buy it for 1,500, so you naturally drop the price. Am I right? The same psychology is the same in property as well. The same psychology is the same as in any product that you want to get rid of, but you want some money. Am I right to say that? Yeah? So what happens? So when you cannot find a buyer, not even one buyer, in this room, there's only about 7, 8 of us. So you can't even find one buyer. In this simple example, what you do naturally, but you need the money so desperately, you drop the price. And when you drop the price, what happens? It starts to come down. It drops the price. It will only come down at the point of what? She finds a buyer. The transaction happens only. Then only it drops down. Understand? Okay. So she drops it down to 1,400. So let's say nobody still wants to buy. Drops it down to 1,200. Still nobody wants to buy. Then after that, she drops it down to 1,000. She gives a rate. Definitely worth that price. Somebody buys. Amen, very generous and nice. They say, okay, I want to buy that. And then the transaction happens, so then it drops. Now you can see swing high. So basically, in definition, a swing high basically means, you write this down. The swing high basically means a point on the chart, a point where the price, a point in the market, a price level in the market where you can't even find even a single buyer to buy even 1 penny higher or 1 pip higher. That's all it means. Is you can't even find one buyer to buy the product for even 1 pip higher. That means basically the price of the product is not worth even any pip higher than that. Because nobody is convinced that it's worth higher than that, so therefore nobody wants to buy even for 1 thing. It's fascinating because in the forex market, there's millions and millions and millions of people participating. And even the millions and millions and millions of people, which in cash amounts is how much per day?
Trillion.
Yeah, 5 trillion, that's right. Current research is actually 5.2, it's gone up. Right? 5.2 trillion dollars. That's about what? 52,000 billion. Crazy, man. Yeah. 1 trillion is 1,000 billion. 5.2 trillion is 52,000 billion. In that amount of cash flow, you're saying that you can't even one buyer believes that it's worth even 1 pip higher than that price. Incredible, isn't it? Then the swing high is formed. Okay? The same thing in any single thing that you do in your life. You want to sell your property, you want to sell your car, you cannot find anybody to buy it, drop the price, swing high is formed. The opposite is for the swing low. Okay? So the swing low, what's the definition now?
A point in the market where you can't find a single seller,
Is it seller?
a buyer.
Think about it.
Too many
Seller.
sellers.
Seller.
Too many.
So seller is not
So
willing
for
to bring the
instead
price
becomes
low.
selling.
Exactly, right. Think about it. Think about what you said. Huh? When can the price go any further down? When? When can the price of your property? When will you stop saying, you know what, I don't want to drop this price anymore?
Too many buyers coming in the market.
Supply.
Forget about the macroscopic level. Think about yourself when you want to sell your property. When would you be stubborn on your legs and say, you know what?
Price too cheap.
You have a lot of buyers
You did your bottom line.
for that price. We have more buyers. For
Okay,
that
first of
price.
all, we go from the top. So from the top, when will you reduce your price? From the swing high, huh? So you can't find a buyer and you're desperate to get some money, right?
Yeah.
Then on the opposite, too many offers, how can? Then you go up. When will it reach the bottom point, the swing low, and start to bounce up? When? Think about it, your property and you looking to sell it. When?
When you, I don't know when you,
Find buyers.
price goes too low.
Exactly.
When
The
you-
price
yeah.
was too low towards when? Until
It's not selling.
yes, until it's not worth.
It's not worth the value.
It's not even worth even selling that cheap because there's no profit margin anymore. Think about it. If you put, let's say if you want to make this marker pen, right? The whole cost production for making this, all your employees and all the materials and everything costs you £1, right? And you are now selling in the market for £3, right? And then suddenly you cannot find any buyer. Naturally, you drop it. No? You drop it at 280, 250, 240, 220, 210. Then you finally come down to 120. Would you reduce any further? It costs you £1 to make this. What's the point then of reducing it to 90 pence? You're not going to make any profit at all.
Yeah.
That's when you say, you know what, enough. I'm going to stand my ground here. You guys want it, you take it. If not, get out. And if you had enough of capital power, then they all have no other choice. And if you're the only guy distributing those marker pens, then they have to buy it. They've got no other choice, right? Okay, man, we squeeze this guy until the end, and 120 is the best price. So then it starts bouncing up. Then the other guys who bought it, then they will sell it for more higher prices because they bought it at 120. Yeah? Then 150, then it starts to climb again. Fine. You see the same psychology, same consumer psychology happening again where? Property market is one, where else? In your day-to-day activities.
Actually, I have buy old iPhone. And then I said, oh, we're only willing to buy it for 150. Because I got too low.
Yeah.
Not even budget selling it at that price.
Have you just observed that? You see, this thing that I just explained happens in everyday life. So it happens in the markets. You must understand that this is market dynamics rule number 1, right? Everything that you do in the outside world is what?
It's the same as what you do in the market.
Exactly. It's nothing exclusive to what you do in the financial market. If you can understand this concept, then it makes more sense. Huh? You appreciate more. And then you can formulate your own rules much more faster. So that also happens in your day-to-day activities when you go to the what? What is your day-to-day activities? What do you guys do?
Shopping.
Shopping, exactly. The supermarket, you see this absolute psychology always happening. Right? Sometimes you see some products on discounts, 3 for 2. You know? And it's global as well, right? It happens throughout the whole world as well, isn't it? If you go to any supermarket in any world, you always see, 2 for £1, 3 for £1. And sometimes at Christmas, sometimes they even bring it even further, isn't it? Huh? Sometimes you also see it even dip below even this price. Sometimes, even though it costs them £1 to produce it, sometimes they even sell it 90 pence. Why? Exactly, right. Huh? So just to get new lists, to get more brand awareness, sometimes you drop it below 90 pence. Amazon is a very good example. Do you know about this Amazon story?
No. Good.
So one of my very good friends, who's very, very good in the internet marketing, he always tells me this story about Amazon. Amazon, basically on the marketing perspective, what they did is, so what they did is that they keep spending money on the marketing. So then all the profit and loss was all going all the way down. Right? They're not making much money. But the reason why, of course, they had a large pool to spend on, and most companies won't be able to do that, especially small businesses, because they had a big surplus of cash. They kept spending money, even if they are making a loss 10 pence per product, they don't care. They just because why? Because in the first phase, what they're doing is brand awareness. They want everybody to know about them. They make just the cheapest one. But once they hit a critical threshold, once they know that this amount, certain amount of people they've reached to, brand awareness is set, everybody knows that this is a good brand, then they start rising up the prices and discounts. Why am I telling you all that? Because the concepts are very similar in the market. So based on that concept, so you can also formulate your own strategies and systems, and you can put your own parameters as well.
I have an example of that.
I'll just complete that, and then you can carry on. So you see the dynamic breakout. So you can see that if it costs £1 for you to produce that product, when all the times there are sometimes definitely outbreak that £1 level, just like what I said about the Amazon example, just for creating brand awareness. That's why we always have risk management as one. Second thing, also that's why in dynamic breakout strategy we also have variation 1. And variation 1 is when what happens?
Break this
No,
higher low. Say trend defining breakout, so break this higher low.
In this example, it breaks what?
The higher low there.
Is that right? Nobody
I think we
knows.
started before.
Are you going to save today?
You still there?
Breaks the swing high?
Makes this
That's variation 1 variation 1. Yes. Break the higher low on the second one.
Yeah, breaks the swing low, right?
Yeah.
And what is the term called? It's a price?
Price threshold period.
That's right, yeah. That's when that happens. It breaks all the way goes down and it breaks them. Yes.
I think you need to change the price structure a bit. Everyone thinks of it as a break of the
Oh, so should we call it PSB then? It's called
just being
TIBO.
fun.
Oh, TIBO, that's right. Trend established breakout, that's not. We'll go through that very soon today. Okay, so Stephanie, you want to add something? What did you say? You got one example?
Oh, in last week I went to Waitrose. I found, so normally they sell roast chicken, but they have a new product called the free range organic roast chicken. And I think the normal chicken sells for £5, but they're also building awareness, so they were selling it for 50% cheaper.
Oh, okay.
So I bought it.
But next week you won't be able to buy it.
Yes. Probably different price today.
That's the thing, yeah, it's continuously happens. This psychological perspective is everything. So, dynamic breakout, just like what Sabir was. I'll get Sabir up very soon. But dynamic breakout, there's 6. Shouldn't have told you that, but anyway. There's 6 variations. There's 6 variations. Do you all know that? No?
Yeah.
Okay. Oh no, so okay, so we can ask some. Oh, okay. That's cheating. They came prepared. Do you know? Okay, no worries, we'll learn. So there's 6 variations inside the dynamic breakout. Now, the 6 variations can be split into 2 categories. What are those two categories?
One is getting defined,
Very good, yeah.
and one is getting defined.
Then
Established.
Trend established, that's right, yeah. So, time breakout is split into two categories, the 6 variations. One is trend. Eamon said, what is it? Trend?
Established.
Trend established breakout, huh? So TEBO, TEBO, right? And the next one,
trend defining.
trend defining breakout, TDBO, trend defining breakout. And therefore, all the 6 variations will fit into those two categories. So, based on the trend established breakout, what variations will fit under that?
Trend establishes variation 4
And
and variation 5.
that's right. Yeah, variation 4 and variation 5. And trend defining breakout?
Is the rest of the variation.
Exactly, that's right. Yeah. So that's how many variations altogether?
6.
6. So therefore, everything else will fit under here. 1, 2, 3, and
6.
looks only 1% of the way.
1, 2, 3, 6.
Think about it, 1 to 6. This is not a trick question. So what about is remaining is 6. Right? Yeah. So now we got all the 6 yes.
Can I ask
Yeah.
5? How can it be the same as up? Did you say 1?
The same, right?
No, it's 5 and 4. Did you say
Yeah, 4 and 5 are trend established.
5 as well?
Yeah.
Okay.
Not sure why?
No, I'm not sure why.
Okay, stay as the answer. Alright, good. Okay, so I'll get Sabir to come and explain about 4 and 5.
I do 4.
Variation 4 and 5.
I do 4.
Yeah, you only do 4, you don't do 4. Somebody else can do 5. Stephanie. All can do 5.
No way. It's not the same.
That's fine.
Hello.
Yeah, you can take that.
So, in the variation 4,
Variation 4, right?
so now we have a low, high, lower high, higher low, sorry, and higher high. So this isn't established as an uptrend already. So now on a variation 4, we'll put our entry here. On the high of the high here. So the price is here now, currently here. So we put our entry here. On the bar that make the high. So when set the bar is like this, our entry will be 3 pips above and 1 pips below that bar that makes the high. And then, sorry, the entry on the high of the bar, 3 pips above, and low of the bar, 1 pips below. Yeah. And then once we enter it's going up, once we triggered, we'll trail the stop loss how many bar? Does anyone know?
3 seller bars.
3 buyer bars.
3 buyer bars. That's right.
Yeah.
3 buyer bars.
Yeah.
So once we triggered here, and then we'll wait for 3 buyer bars to happen, and then we trail behind that bar. That's the variation 4. How many pips behind that bar?
I think before we go into the specifics of the strategy, but does everyone capture the pattern of variation 4 or not? Yeah? Can everyone observe the pattern? What is the pattern here? What is the most critical thing about variation form?
It's an established long trend.
That's right, it's an established uptrend, no?
Mm.
Yeah? And an uptrend is usually defined by what? What's the definition?
Swing high, swing low.
Very good. What do you say?
Oh,
Higher highs and higher lows, no?
Highs and lows.
Has this already have higher highs and higher lows? Huh? Yeah? But where is the higher high? Yeah? And where's the higher low? Yeah? Do you only have one higher low? Or do you have more than one higher low?
okay, no, you two.
Yeah, there's another one. So I keep this. So remember, in here, in variation 4, we are looking at maybe 2 higher lows as well. So another thing, your pattern recognition must become very strong. Huh? Okay? We will do that in the application process. So you'll be clear about this one. Okay? So therefore, if you're clear about that, you must also be able to know how to draw the reverse. So who's going to draw reverse? Him?
Sure.
Yeah. So we can check if you're doing it correctly.
The reverse of that. Okay. Nobody think?
Yeah.
You could be the supervisor.
Okay.
Okay, so what? Lower. Let's just put lower. And higher. And boom. It breaks out. So you've got a lower low.
Very good.
Then it goes back up here. So then you've got a higher, a lower high.
Very good.
So you've got a lower high. And then
Okay, very good. Yeah.
lower low.
Yeah.
That's it. Good.
So we have the same pattern again. Can you all see? So over here, remember in traders basically we usually say look for the letter N, no? That's interesting. Let's try it. Okay. Anyway. So we got 2 N's here. Can you see? Pattern recognition. Huh? Over here, 2 what?
Use.
Use. That's right. Yeah. That's always the recognition we use. So we got 1. And this is, if I were to say this is a high, so I got lower high here. So we got 2 lower highs, and then we got 1 lower low. Over here we got 2 higher lows and 1 higher. Okay? So remember that for variation 4. But in essence, you will be safe if you remember the definition. There is higher highs and higher lows. Remember that I went through this before as well. It's by fulfilling this equation. Now, the most important part of this equation is what? Is the most important word here is what?
Higher.
No. Something in between. What is it?
And
And. It's and. Yeah, it's not or. It's and. It must have both. Then only it's fulfilled. Right. Huh? Right? In an established trend, in an established breakout, trend established, because the trend is already established, momentum is already there. Right? Huh? It must be end. So you see, in this figure, in this pattern, it's a higher high already. You can see? So it's fulfilled, it's a tick. And it must also have a higher low, which is here. It's confirmed by 2 higher lows, you see? So we're given. So higher highs and higher lows fulfilled. In the next ones we're going to look at next variations, this both won't be ticked.
both will be.
Both won't be ticked until it breaks out. We will observe that. Okay. Then in the downtrend, it's pretty much similar as well. Huh? So we go lower, lows, over here, tick, and it must have a lower highs. Got it? Okay, that's fine. Okay, thanks. You can do 5?
I can do 1, 2,
You can do 1 and 2 as well?
1, 2, 3.
How about 5? You can do 5?
I'm not very good with 5.
Okay, so who wants to do 5?
I could be proud, but I was probably looking at this.
No, have you looked at it already? Okay, let's see, come on. Let's go for memory. Come on, let's go.
Memory, wow.
Yeah, I'll help you. Do it.
Yeah, help me.
No, 30,000 noise.
all yours. Variation 5, yeah.
Version 5, right. So
Which is a trend established breakout. Huh?
yeah, so do up. Sorry.
No, you don't do that. Thank you.
No, because I don't really know something about it. Alright, okay. So that's sorry.
Are you looking to go short or long?
No,
You're going to go long here.
this is where I understand.
Okay.
Yeah.
Now, I'll help you now. Huh?
Mhm.
In a trend established breakout,
Mhm.
okay, basically in a variation 5 trend established breakout, okay, it's usually a reversal point of a previous trend. So if it's already been uptrend, in variation 5, I will be looking for to go short actually.
Sure.
But something critical must happen in this structure
Yeah.
to formulate a variation 5. So what must happen here? So we can keep the same diagram. But you're looking to go short, but something must happen now. It's already an established trend from before. Yeah. What must happen? Goes down. That's
Goes
right.
down,
That's right.
and then this one is lower.
Wait.
This, oh,
Now something has happened over here. It's broken what?
Swing low.
The previous swing low. No.
no, yeah.
Therefore, that's called a price structural failure. That's right. Huh? So it's a downtrend already now.
Yes.
So it's broken. But one more extra thing is happening over here because you see.
It's lower.
Okay. So first step, it must break this swing low. Must break that swing low. That's the first one. First step. Yeah, first step. Yeah, broke the swing low already. Then next step, it must come back, retrace. Second, and then the third one is what does he got to do? So he's got it all right now. So far, yeah. Third one.
Some of the
Exactly. Stop. You can stop. It doesn't need to break the swing low yet. But then the swing high is not confirmed. That's the third part.
right. Okay. So that's
So you can draw a circle around there.
It's like a 3, yeah.
Yes. So basically, we draw a circle around this point.
Right.
Yeah.
Mhm.
That's the swing high. It's confirmed as it goes down. And then that's the third point. So you can see there's 3 things that are happening here, no? It breaks that first. Second, retrace. Third, swing high. It drops, swing high is confirmed. Then it's variation 5. But let's take a look at it from the definition point of view. What is a downtrend?
Low, lower, higher, low, lower, low.
Right. This is the thing that you must always remember. What is it?
Lower,
Low.
lower, high.
Lower, 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 high.
Yeah.
You must know this by heart. Very simple. Lower, low, and lower, low, and lower. So let's take a look at over here. Now, can you say that this low is lower than that low?
Yeah.
This low is lower than that. Am I right to say that?
Yeah.
Yeah. Okay. So therefore, this low is a lower low. Am I right?
Yeah.
Now, once this swing high is confirmed, when it comes down, am I right to say that this high is
Low high.
lower high than that? So this is a high, but this is a lower high. Remember, to establish that anything is lower than something, you must first have a reference point. No, I can't say that NAV is taller than someone. I can't say it's taller unless I've got someone else as a reference point. If it's the only guy who's a living being in this entire universe, then there's no comparison anymore, isn't it? There's no relativity. That's how the theory of relativity exists when there is duality. So, if you do not, so now because I've got 2 points, then I can compare now. So one must always be high or a low. Just as a high, just by itself, it's a high. Then the one in comparison, then we can say it's a lower high. Remember also, don't confuse yourself, because I've seen this is the clients we've coached, is that sometimes you confuse yourself between the highs and the lows. You always compare the high to a high. Yeah? You compare the low to the low. So you always, when you compare this, compare to the low. You don't compare this to this. You're confused.
Yeah.
You always compare the high to the high. Whenever you say this is a higher high, you must compare the high to the high. Don't go and compare this to this. Right? Okay, good. So now, what do we have? We have a lower low. Makes sense, right? So this one I'm referencing as the low, and it's the lower low. So therefore, we got a peak over here. Am I right? Yeah. And then the next point is what? Is lower high. This one is also a lower high. So both the equations fulfilled. Therefore, it is a what? Before it even breaks out, it's trend established. Got it? And this is why variation 4 and variation 5 comes under trend established breakout.
So the direction you're
going is
sure.
Yeah. So in a short, always how you picture the pattern is that first of all it must be an uptrend before. Then it must break and then
On the lower low, right?
you are entering when it breaks out of that low.
Okay.
Okay. Right, now what I want you to do in your papers, individually, what I want you to do is draw the opposite for a what? For a long.
Yeah.
For a long. Okay, go for it. In your own paper. Oh yeah.
Let's see if
What are you doing?
I just copy this one.
I've already
Oh, look at that then. No. Okay.
Like that first. Yeah.
Using this price run in the 9 o'clock session, is it this variation type price run?
Similar, right?
Or
Yeah.
is it
But then they drill down to 4 hour cycles.
Going on the right track. Okay, so what do we have? So do we have what? Let's go again. Who has got what? Has got?
Yeah, that's correct.
Very good. So we got everything of the equation. What's the equation? What's the uptrend? What's the definition?
Higher highs and higher lows.
Higher highs. That's right. Then higher lows. So now over here, what do we have? Where is the higher high? Where's the higher high?
Where? You mean second one?
Where's the higher high? Oh, this, yeah, that's the one. Yeah,
Yeah.
alright, good. Yeah, this is the one, no? The higher high, right? Plus. Okay. Right, huh? Then the higher low. Which one is the higher low? This one. Yeah, okay, good. That's it. Therefore, before we enter the breakout, remember you see it's a breakout, right? Huh? Before we enter the breakout, it's already the trend is established because both of it is fulfilled already. Got it? So now in the dynamic breakout, what do? We then, once we got all these things, ready, variation 4, variation 5, whatever it is, we then put a pending order to break that swing high. Because why? Because remember at the beginning, I started off with saying what? A swing high is one place where there's not even a single buyer in this entire universe who wants to pay a single penny more. And that was the psychology before, right? This all happened. Huh? So before all this happened, that was the psychology. So no one in this entire universe thought it was going to be any more, much more, is worth any penny more than that. So it's coming down. But remember, that was psychology before. But what happens if a new wave of psychology happens, a new consumer confidence happens, then don't you think that's a good place to enter? Because it's a reverse of psychology from before then, isn't it? Huh? Because the old psychology is broken now. It's like saying, you know, for many years, a 100-meter sprint was done within, I think it was 9 or 10 seconds basically. And a lot of people had this belief that you cannot do it any less than 10 seconds. Until one guy, I think it was Magic Johnson, I think I was called those, I can't remember. But until that person, basically, I think it was Magic Johnson, I think until he broke that record, then what does that do to everyone? Believe that everybody is. It's possible. It's possible to break it. Then a new wave of so many runners come after that and they even beat 9 seconds, 8 seconds. It keeps on going, isn't it? Right? The same thing here, concept. Based on concept, you can formulate your parameters. And if your parameters are tight and are quantifiable, then they can be executed consistently. That's right. Stephanie has heard me say this so many times, so just memorize it. Until it drips and sinks into your subconscious, I have to keep repeating it. Very good. So okay, so this is variation 5, so we got that. So the pending order is put over here. It's trend established before the breakout. So then, as we usually do in our evening sessions, we'll tell you the entry level, and then we'll tell you where the stop loss is. Now, where will the stop loss go? So, to do that, we can now take a focused look into that height. You're not under any punishment.
No, I understand it as well. So before I think.
Okay, good. So let's now take a more zoomed in look before we go on to the other variations. So now you can see I'm going to put a pending order here. Am I right?
Mm-hmm.
Yeah. What type of breakout is this? Is this or this? Is it TIBO or TDBO?
TIBO.
Obviously, it's a TIBO. Raise your hands.
TIBO. Trend established.
So there's only 3 people who are saying it's trend established.
What
Trend established as well. So raise up your hands really high if you think it's TIBO. Okay. There's only 4. Okay. The rest, what do you all think is TDBO? Who don't know? Not sure. Not trend established. Then why did you raise up your hands?
I wasn't sure.
Now you're sure. Okay, that's right.
Follow the crowd.
Okay, so most of you are able to go. Okay, now, why you all unsure? Remember that I told you all the uptrend is higher highs and higher lows, no?
Mm-hmm.
Now the price is here. Before it's going to break out, is the trend already established?
Yeah.
Do we have a higher high? Yes, we have. Do we have a higher low? Yes, we have. So therefore, the trend is established even before the breakout happens. So it's a trend established breakout.
Mm-hmm.
Okay? So we all understand that. So now let's zoom in into this. I'm going to zoom in into the swing high over here. So now let's say the swing high is made up by bars like this. Okay? And this is the bar that makes a swing high. And then finally, prices then start to drop. Everyone clear? Mm-hmm. So this is the part that I'm zooming into. Huh? So now the entry is going to be put for the high of the Chelsea bar. Am I right? Yes. Yeah? Okay? And then we put a few tips on what I'm going to give the specifics. It's all in the sheet anyway. The next is the stop loss is going to be put for the low of the bar, which makes that
Swing high.
swing high. That's it, yeah? So that's the stop loss. Initial stop loss. Your entry is going to be. So we got all of them. Let's see things now. Where's the target going to be?
2 to 1.
2 to 1. Very simple. Arbitrary target. We're not doing adaptable targets over here. So 2 to 1. That's pretty much it. Okay? Now, once price starts to, let's go up, and then it starts to break up from there, how do we then start to trade our stop loss?
Free buyer.
Buyer bars, that's right. Huh? So it's basically a time stop loss as well. So let's say I've got things like that, coming down, breaking up. So we got this. Break up from here. That is a, what bar is that? It's a green bar or red bar?
Green.
Green bar, right? So it's my first buyer bar already. Can you see? How many more do I need before I can trail? I need two more, no? 3 buyer bars altogether, huh? Before. Where is my stop loss at the moment?
Below that bar.
Below this bar. Below this bar, yeah? The bar that makes up the swing high, no? Yeah? So it's over here, my stop loss. Initial stop loss. So I can't move my initial stop loss yet. So, yeah. Now the next one, let's say it becomes a red bar. What usually happens then?
Panic.
Panic, that's right. Fear starts to strike. Oh, is he going to hit my stop loss? Right? Yeah. Okay. Then the next one, even more panicky. Right? Can you rain here? Some of you may stop praying. Then suddenly, then it starts to zoom up.
Wow.
And a sigh of relief.
Prayers answered.
Your faith in the higher starts to begin. Praise the God. Okay. Then the second point starts to happen. Huh? So this is the second buyer bar now, no? 2. Still need 1 more, you're waiting. Right? Because you don't want to keep your stop loss all the way there, no? Right? Then, next day, market's a bit more nicer to you. Starts to happen. Then you trail your stop loss to behind to here. Third buyer.
Okay.
Got it?
How many picks? You?
You shouldn't do only 1 pip.
Just one. One.
Okay? So that's pretty much it. You keep doing that until you get to the top.
So if it's an inside bar,
Yes.
that last bar, how would you play that?
Is it a green
How would
bar?
you manage it?
Is it a green bar?
If it was a green, could be,
Is it or is it not?
could be.
What do you mean could be? When is it not then?
If the close is lower.
So simple, right? Close
Right,
by
okay.
is green bar. But there could be one question you can ask based on what Earl says, right? When would you say maybe it's not really a green bar? When would you not consider it as the third buyer bar? Even though it shows green in color. When would it
When
be?
the open close.
Doji.
Yeah, when it's going here, right? Huh? Because remember the whole concept is what buyer bar is basically where there's a good difference between the open and the close. There's a good amount of buying pressure. No. It's just like your cash till you open up in the beginning of the day, right? Let's say your cash till in the beginning of the day when you open up the shop, well, let's say it started at 10,000 pounds, no? At the end of the day, in scenario 1, it closed at 15,000 pounds. It's very obvious. You made a profit. Am I right or not? 5,000 pounds profit, no? In scenario 2, you opened it up at 10,000 pounds, and at the end of the day, you closed it with 10,001 pounds. Is that a very good profitable day or almost break even? Right. So we need to see the difference between the close and the open as well, huh? Between the profit and where it opened up. Okay. So therefore, it is good enough to see. That's why we have the parameter defined as well. That between the close and the open, at least there must be 20 pips. If then we won't consider it a doji bar basically. Then it can be a buy bar.
Right, true.
Yeah. But also, the exceptions when it can be a high test bar as well. So for example, you get bars like that, right? When there's a big long tail which makes up 2/3 of the bar as well. Okay? There's a high test bar, that means the lot of selling is coming, right? So I won't consider it as a buyer bar, alright? Okay, understand?
Yeah.
I would rather consider that as a seller cost. So sorry, if the close price was here.
Yeah, it was higher.
Just make it
Yeah.
so open was here. Close one.
So you would consider that one?
No, I won't consider that as a buy sell.
I get it.
Right, okay. Yeah.
But to quantify, that's why we say the tail must be 2/3 of the whole range.
Also,
Okay.
what was that bar called?
High tester, tested the high and came down.
Lotus.
Okay, good. So we've covered all the exceptions. Now, some of you may be wondering, okay, that's all good. I know variation 4 and 5 now. I also know the strategy as well. All that. Of course, you can practice. Like everything. Then, how about the other variations then?
1, 2, 3.
Now, 1, 2, 3, and 6. They're quite simple, they're not. Who wants to go for it? Looks like Stephanie is saying me.
Wow, good for Stephanie. So enthusiastic about that. But
I was
No.
volunteering somebody. What?
Go.
Do what?
Okay.
That's how we can do.
video, I have no idea.
What is one called?
Oh. Was it one?
Yeah. T. Variation one is
Yes.
Structural failure.
called fresh structure. So on an uptrend, that's when you have a break. So you have a low, high, higher, low, higher, high, and then higher, low, and then the price goes, breaks the higher, low. So in this kind of scenario, this is defining a downtrend.
Where would we enter the trade?
We enter the trade at the break
Yeah. Why is that?
because from before the price went down, nobody in the world wanted to sell over to the higher low.
Okay.
So if on the way down, and you put your order to get in around this area,
Yeah.
if it triggers, that means there's a change in psychology where people think that it's not worth it's worth lower than what it is.
Very good point. Yeah. But the thing in terms of momentum is that why would you say this one variation 1 is a trend defining breakup? Why is that? Why would you say this variation 1 is called a trend defining breakup? Why?
Break that lower, higher low.
And then
Went down.
something is happening here. Yeah, you're all getting right.
It break that structural failure that we
Yeah, it breaks the structure that, and therefore it is defining the
trend.
trend.
New trend.
Because have you observed? Because until it gets to this point, until it breaks. Yeah. You see, at this point here, is this still uptrend?
Yeah.
Yeah? Still uptrend, no?
Yeah.
Then it keeps going down now. Now this is the level we are looking at, right? Yeah? Still uptrend. Until it breaks that level, then it becomes a downtrend. Huh? Because the key structural level has been broken. It's like, usually I use the example of what, like a house, right? You remove the critical pillar inside the house. Let's say there's a middle pillar over here in this house. I get rid of the pillar. What happens to the whole house? It collapses. Key level you take out, the whole foundation is gone. Right? Breaks. So therefore, once it breaks that critical level, the whole trend just gets broken down. Or the momentum is all gone. Got it? So therefore, but you can see that when it breaks out, it's defining the the trend, right? Because it was uptrend before that, but once it breaks out, it defines downtrend. That's why it's called trend defining breakout. So,
So
I'm sure, yes,
So the difference that I see between this and the variation 5
and 4, trend
and
established
4
breakouts.
is that you're not waiting for 2 breaks. You're doing on the first one. Is that what it is?
No,
The criteria in terms of when you go
you
in.
see, each variation will differ.
Yeah.
Right? Don't remember like that. What you should remember by is that the 2 categories, how they differ by, go by categories first. The 2 categories how they differ by is that in the first one, when the breakout happens, the trend is already established. The trend is already established before the breakout happens, right? Because of higher high, higher lows already. But in this one, only when it breaks out,
It's going
the
against.
trend is going to define. Only when it breaks out, the new trend is going to define. Because you see, until it breaks out, it's going to be just still an uptrend. But once it breaks out of that, it's going to be a downtrend. So the breakout is defining the trend. That's what it is. In the other one is, the breakout doesn't need to define trend. It's already established before the breakout happens.
Yeah.
Yeah?
Can you just quickly draw the variation 5 again, specifically? Because that was also quite similar, wasn't it?
You should have it in your paper,
Yeah.
right?
Yeah.
As Earl was nicely teaching you all.
Yeah. It's quite similar, though, right? It's not too.
Yeah. But there's a few things that are happening in 5. What is it?
Lower high is low.
That's right, there's a lower high as well. In here, there's
Yeah.
nothing, you're just breaking out on it, no?
Yeah. So you're waiting for the.
Very good, yeah.
So is it,
The last one. Very good, yes.
is it when you miss the variation 1 then?
You miss, what you miss?
I can't say this right. Because this is on a further, this is further down the.
You could have the same thing play out, right? You
Yeah.
could start as a variation 1 and then end up as a variation 5.
That's what I mean. Yeah.
Of course, yes, you're right.
I have a question.
Yes,
So the breakout we're talking about for variation 1 is the breakout, right?
that's right, yeah. When it
And
breaks
then
the
for variation 5 is breakout.
that's right.
Yeah.
Yeah, so the difference is when he said there's a trend established, there's a lower high that has formed here.
So it's where
So
it's
that's why when it
established.
breaks out, this
That was
is
the
where
breakout
that's
point. That was the established.
Yeah, and over here, like Stephanie pinpointed, over here we're entering it here, variation 5, this lower low point after it's retracing.
Yeah.
Over here, we're entering here straight away.
Yes.
Yeah, because that's defined. Okay, good.
Yeah.
Okay, good.
Just saying, if you saw that, you would enter it. You see, if you saw the 1, the variation 1, you would enter.
Yeah.
But then,
That's what we're talking about, right? Entry on the
yeah.
break of the price structure.
Right.
But still, you would have entered it already before you get to the 5.
Of course, yeah. On variation 1 basis, yes.
Right.
So is it, could it be
But
said-
remember that, of course, before variation 5 sets itself up, it must be already out, at least for profit and stop loss, no?
Yes. Yeah. Yeah.
Because you're going short, but if it starts to retrace, your stop loss will be hit, no? So you gotta get out before variation 5 sets itself up.
Yeah.
In euro dollar, you will definitely hit all your targets because you remember you went all the way, kept going all the way down.
Yes.
Variation 1, no?
Mhm.
Right? It took a long time to set up a variation 5.
So in variation 1 is more aggressive than variation 5.
No, it's not.
Then
But
you
first of all, you
define-
define what is aggressive, no?
Entering, because here you're waiting for it to pull back up before you enter again.
Yeah.
But
More
this-
confirmation, more
There's more
confirmation.
confirmation of 5.
Yeah.
Except for it.
It depends how you want to define. Whether it's late entry or see, usually the terminologies we use, you got to be careful. Late entry is usually said when you want when you're
So the difference is that in the,
usually okay. Yeah, sorry again.
so the difference between these two is that variation 1 is a high low and variation 5 is a low low because the rest is the same.
Exactly, yeah. But basically, remember always the difference of the categories because in this one here, trend is established. Here, trend is established. Lower lows and lower highs, both ticks. Over here, trend defining. Only when it breaks that level, then only it's a downtrend. So the breakout
Before that, it was established.
It's a, yes, you're right. It's an uptrend.
First part is the trend, same.
Very well said. Only when it breaks out, the new trend.
Then you get. Yeah. And there is no new trend.
Okay, go ahead. Okay. So
Why is
now,
there a
yeah.
new trend?
Now,
Why is there anybody in case 5? Why is there a new trend?
why is it not a new trend? No, it's a downtrend, right? It's already established. Variation. See, anything before the breakout, anything is called established if you got both the ticks, no? Here, you see, there's a lower low, there's a tick. There's a lower high, there's a tick. But here, you cannot get both the ticks down here. Only upon breakout, you probably will get a lower low because it's broken that low, but you can't even get a lower high. You understand what I mean?
So
Yeah.
in this case, it is not necessary that it will end up in a downtrend.
No, you see,
Because
once it
it can
breaks,
have-
once it
have-
breaks that, we consider it as a downtrend.
Okay.
That's it. Yeah, so it's a critical level in the structure which is broken. The whole house is collapsed. Okay, so now the opposite uptrend, who's going to come and draw? Savita, yeah. Ava just nominated you. It's opposite. It's so simple. So you see this one, variation 1, it's going to be uptrend first and then it breaks that low. So for to go down, what must we do? Opposite first. So you must be first in a. Very good. Yeah, spot on. Very good. Yeah. Keep going down one more. Go down. Go down one more. Yeah. Keep going down now. Let's now end it. What does it do now? Variation 1. So it's a downtrend now.
Yeah, so this is high. This is high.
No, lower high. Remember, I always going to compare high and high. Lower high.
And this is low. This is the high.
No. No, carry on. Student, you gotta help them.
What do you need to happen for a structural failure? So what's the structure at the moment? Is it going up or down? Down. So what that needs to happen for you to go up, like considered up?
So break the lower part,
so that means it's going down. And it's actually lower low.
this one.
Yeah, that's a lower low because it's lower than the previous low. Yeah, so if it breaks the lower low, that means it's still going down. So what does it need to break so that it's
Going up.
going up?
It needs to break the.
The higher.
Exactly, spot on. So draw the price going up. Exactly. That's it. There you go. Variation 1. The variation 1 is determined on the break of that. That's it. Huh? Okay. Yeah, you remember that?
Yeah. I don't think I've traded a TV or this variation.
Oh, you have? Or maybe we haven't got. When did you start trading from?
September.
Oh, that must be at this one. Yeah. That was
On
one.
T-Bows.
Oh yeah, you don't trade that dynamic.
Yeah, trade that right now.
Okay, no worries. So basically, so now we got. Okay, so that's it. So we got a downtrend from before, and then it breaks that swing line, and then it comes up. Variation 1. Again, when it breaks out, it's defining the trend basically. Now, got it? Okay. So that's 1.
What is variation 2?
Variation 2. Have you all had? Not had enough already.
How many can you find out of all these? Okay. 6. I don't know. I'll have to improvise.
Okay, variation 2 now. Variation 2. It's let me show you maybe an uptrend, maybe it's fine. Do you want to go with it? Okay. I just forgot. So I
Starting from scratch as well.
Two. So we have high, lower high, and higher high. So up to this point now, if we have another lower high here, then we will end the short here on this bar that make that lower high. So short be here, and then we'll end the short on this bar. Is that correct?
Yeah, but for the lower high to confirm, what must happen? It can't be a lower high, this is going up, right? What must happen? It must come.
On the lower high.
Where's the lower high in your diagram?
Is here. Oh, here.
Yeah, that's right. But how can it be a lower high when the price is going up? So it must
So
come.
it must come a little bit here.
Yeah, that's it. But
So
not,
we will confirm.
but not broken the swing low.
Not broken exactly. So it must come here, and then we confirm the lower high here, and then it hasn't broken this
That's right.
higher low yet, and then we'll enter this.
Now, there's one more thing in this diagram here. What can you all see? That is not actually right.
The higher low.
Lower, higher,
The first
High.
edge.
Yeah. What did you say, Savita?
lower, higher.
Yeah. So what should it be actually?
Lower, higher. Lower, low.
Oh, I can see somebody whispering in my head. Yeah. What do you think, Sabir? Is that a lower high?
Low, that should be lower, low, where it says lower, high.
High and low.
Oh,
Yeah.
Should be a
higher, yeah, wait.
Remember, this is what I told you because we always compare the low to the low. They don't get confused when comparing to the high. And like,
That's a
okay, so that's good. So that's all far so okay. Now write the definition for uptrend now. Okay, write definition for downtrend.
lower high and lower.
Okay, so let's go through one by one. One equation by one equation. So now, according to the first one, does this figure fulfill both of them or only half of them? Is there a higher high?
Yes.
But what's the recent thing that has happened? The most recent, what has happened? It's a? Is the? No, look at the highs only for now. What's the most recent one we have on the chart? It's a lower high.
Yeah.
Therefore, we don't have a higher high yet, no? So lower high. So we can cross out the higher high. We don't have that. Yeah, cross it out. Yeah, do we have a higher low?
Yes.
Yeah, we do have a higher low, no? So we tick that. Remember, there's only half of it only fulfilled now, right?
Yeah.
Got that?
Yeah.
Only half, only 50, only 50%. Now let's go to the second one. Lower high and lower low. Let's see if it's a downtrend or not. So do we have a lower high? The most, yeah. Am I right? The most recent one, yeah. There's a tick. Put a tick there. And do we have a lower low? No. No. Cross it out. So what? So it's neither a.
It's not a trend.
That's right. Yeah. So from the equation you can see that. So it's neither an uptrend or a downtrend. It's basically a lower high and a higher low. So this is when we call this. What's the name given to this? It's called a.
Single market compression.
That's right. It's called a single market compression because the market is compressing.
Yes.
Single market compression.
That's the word.
It's neither an uptrend or a downtrend because it cannot fulfill both of the equation. Yeah. And when does it usually happen in the market practically?
Side. Where does it happen? When it doesn't know.
When does it happen practically, a practical life? When can you draw a chart like this?
August.
Which is very true. And why does that happen numbers?
Quiet and.
Yes, quiet. So quiet. People
Quiet.
don't buy, people don't sell, not many transactions happening. Therefore, momentum. Therefore, no momentum. This the chart cannot keep going up and up and up and up and up. No highs and high lows can be formed. Momentum starts to reduce. Therefore, it starts to consolidate. Therefore, market compression starts. But remember, market compressions are when you should be getting what?
No, in.
Out, in,
In. I just say in because it's powerful.
in or out or. Okay, if you're in a position, yeah, you can be out.
That's what I meant.
And if you're not in any position, what will you do? You would?
If you're not in, oh, you're in.
You will wait and start
Oh,
getting excited because after any market compression that happens, there's usually a big
Breakout.
breakout. But it's the same thing in life, isn't it? Start getting ready, start getting warmed up, finally a big sprint, isn't it? Yeah. Yeah. So just like that in the market, because they think is it worth higher or not, is it worth cheaper? Sellers want to go, finally one guy, let's go, and then he just says, you know what, let's bring it on, I'm just going to sell everything up. I'm just going to create the conviction that's going to go higher, hope outcomes, traders are finally, but by that time most traders lose confidence, they don't have a clear plan, before they lose the move and they're like, I wish I got into it. It's yeah. Yeah, everything is based on that. Right? Okay, so that's variation 2. So therefore the opposite would be
Low highs and high lows.
low highs and low highs, yeah. So like that. Yeah. So basically like that. Shouldn't break that. No. So shouldn't break it, right there. Maybe one person was awake. Right. So it basically doesn't break that, it comes back further below and then comes up. So that's your variation. Yeah, variation 2. Yeah. No, variation 2 for the uptrend, for going long. But we enter in the high of this. Higher low. Yeah? And then finally, variation 3 is what? Variation 3 is a extended market compression. So for example, so you're waiting for it to break that, right? To give you the uptrend, but then it starts to compress even further. So it keeps coming back down a bit. It's a lower high now, no, you see? So it's still not breaking out, still no trend yet. And then it keeps coming up again.
Okay.
So it's a higher low, but still a lower high. So that's extended market compression. That is your variation 3. And finally, variation 6. It's pretty much very similar to variation 1. Very, very similar to variation 1, variation 6. Variation 6 is basically like this. So basically, we got an uptrend, right? So what is variation 1? It breaks the
Previous swing
low, price structural failure, breaks it. Yeah, variation 6 is very simple. It's all it does is, after it breaks it, yeah, it goes up all the way and it breaks the high. Yeah. So basically, yeah, what happened about 2-3 months ago?
It doesn't give any nutrient.
Yeah, but it breaks the low. Defines a downtrend. So every breakout is defining a new trend. That's why it's trend defining breakout. Understand? So we have covered 6 variations.
What's that one called? Variation 6?
6. Yeah. So it breaks down and breaks. I don't think we have put any.
You just said 2 or more PSA.
Yeah, that's right.
Yes.
Multiple
Price structural failure or price structural break?
Multiple
PSA.
price.
I can see some colorful art in some of your papers, and some of your papers is totally empty. So it tells me one of either 2 things, which is one is that those of you who got a clean blank piece of paper are the ones who have an absolute amazing memory.
Masters.
Yeah.
Everybody masters.
That everything is totally sunk into the subconscious that even if I wake you up in the middle of the night, and I'm like, "Six is that with this, you know?" And those of you who have written down notes as well, so it looks like you totally understood exactly every single word that I've said, and therefore you would know how to reproduce this. So therefore, for those who have clean papers, or those who have lots of notes, what I want you all to do for the next part is bring up a new piece of paper altogether. So if you haven't written any notes at all, so it's easy for you. It's a new blank piece of paper. For those who have written a lot, then you can just turn into a new piece of paper altogether. So, we had, and the thing is, you got to hide away the notes that you wrote.
Oh dear. Yes.
We got to write this inspiration.
I must always remind myself that I'm not talking to ordinary people, I'm talking to masters. Masters are going to master the markets. Right, great. So, we are going to now look at all uptrend examples. What is it? All?
Uptrend.
So we're going to go long. Okay, we're going to go
Long.
long. That's right. So I want you all to start from variation 1 all the way to variation 6. So have fun. And those of you with any doubts, you can always consult the partners.
Long. We're going to do the 6
You
trend.
can also ask me. So let's carry on.
Drew it, right?
Variation 1 to variation 6 uptrend.
Severe, put that way.
Just to draw it.
Yeah,
Which variation?
all of them. I can't remember.
Really?
All the uptrend ones.
Oh, the outcome.
So there's 6 of them.
It's already feeling depressed.
Yeah,
Oh man, Tim, what have you done? Long, right?
so
Variation 1. That's what we're looking for. Variation 1, go on. That's 1, that's good.
one again.
So, go on to variation 2.
Oh, that's 4.
I'm starting with 4.
Stuck. Stephanie, my daughter's name is Stephanie.
There you go. Oh yeah, that's true, isn't it?
Yeah,
Stephanie's in your life. That's so
Yes,
helpful.
Stephanie came to look for me.
Oh, we're not supposed to look at the notes.
No, I'm not gonna do it today. I just making the stress that
Okay.
I need to stand up.
No, that's okay. Listen, just go for memory, doesn't matter. Whichever one that you can remember, just draw. Don't need to look at and draw.
So
Whichever ones, and then whichever ones you don't know, then you ask the people around you. Huh? The reason why I tell you all to look is you're activating the subconscious part of your mind. That's all. Just go for memory. Huh?
So what
Which one?
one you remember?
Hmm?
I
Which one's
I
together?
remember the last
4
one.
and
4 and 5 are the T-bows.
So
4 and 5,
that's
yeah?
4 and 5 are the T-bows.
4 and 5.
Is that variation
4 and 5 are the
Okay.
T-bows,
Just
yes.
to go wrong.
4 and 5.
Variation 4.
Not 1. No?
1 is the
Oh, no.
TB.
Oh, yes, it is. Yes,
It's
it's 4 and
1, 2,
5.
3, and 6. Right?
Awesome stuff.
Yes. So. 4 and 5?
So who's going to be the first one to finish it?
Nice one.
First one to get. Who's going to be the first one to finish it? Or get
All of them, off, it's a race. Okay. It's a race.
That's 1. Oh, no, that's that.
Means that you'll go.
Next will lead.
Boom. Boom.
6, I don't remember.
Is that everything?
Yeah.
Okay, let me see. Long, yeah?
Oh, long. Okay.
All long.
That. 2.
Yes.
But that's the first 3, I can't remember the others.
Is the first 3 or 1, 4, 5 you're talking about?
No, 1, 4 and 5.
Oh, 1, 4, and 5? Okay, that's good.
I can't. The other 3, there's no way. I
Very
can do
good.
them.
Okay, if you don't know, then what do you do?
Look.
You ask for help.
Oh,
2, variation 2.
Oh,
is
it's
the-
not ask someone. Who knows the 6, please?
The
No, you said
double price
it's
structural
the
failure.
compression.
Extra crazy.
Yeah, is that
That's
the
the
same
that's
way?
the first
Yeah.
That's what I'm saying. How would that be? How would that
Uptrend.
be? On an uptrend.
Okay, yeah.
So it's up, and then it break first price structural break, then second price structural break. So like that.
So,
What is it? Was that 6?
that's 6, yeah.
Oh. Right, they're crazy. So you're breaking. Oh, right, okay. It's quite strong.
Maybe, yeah.
So who knows the 3 then?
It's the double extended market compression, where you're being compressed on both sides.
I'm going up.
So
Long
like
way long.
when you draw,
Just correct your 1 and 2. It's
you're
for
not
long.
getting
Remember, it's for
higher.
long. 1 and 2. You need to go.
Oh,
So
no,
it-
way. Yeah. But you see, if it shows,
Oh, what we just saw.
It's like compressing
1
on
and
both
2
sides.
and
You remember?
correct.
I think so. That's all it.
You can definitely get 1. Variation 4. Let's go for the easiest one. Variation
I
4.
just want to invent it. It's not good enough.
Is that?
I just want to invent it. It's not good enough.
Variation 4 you can. Variation 4 you can do. The simplest one. High highs and high lows.
I've got a problem with 3. Someone.
I still
That is
don't
the extended heat
I
compression.
still don't have,
So it's
Um,
boom,
Variation 4 you should know.
boom. Something
maybe I should, but.
Very low.
You can show a variation 4.
No.
Variation 4 is the most simplest.
That's what I see.
Variation 4 is the most simplest.
Yeah, okay, that's
Remember the 2 ends?
like.
2 ends?
Ah, yeah.
Oh, yeah.
That's
I need
variation 4.
to approach a
Is that-
more
that's-
graphic.
No, low then.
So just draw 2 ends over there. That's variation 4. You got 1 filled
Oh,
out.
they're going high. Yeah, that's what you mean there.
So we
Very
Then
good.
one is higher. than
Something
the
like
other.
that, right?
2 end, right? Yeah, that's right.
Very
So
good.
let's say variation 4 already. No? We've done 1 already.
And then the other one was
Like that.
with 2 U's.
That's for
No,
downtrend.
that's
But here we're only looking at only going long. Yeah, you can draw that for downtrend. Very good, yeah. Also,
That's 2, I haven't done 2 yet.
very good.
I know.
What's your 3?
There you go, right? Surprise yourself, you see. Then we go for the next one, variation 5. There's some guys over here who've done variation 5. You can
Is
look at
it
them.
any other letter on the alphabet?
Is it? 4?
For a long, it's going to be a downtrend first.
That's a
So it's going to be
That's three.
what you've drawn on the right hand side,
But it's all question.
Coming?
down, for long. So no, we're talking variation 5, right? Yeah.
Yes.
Comes down, and then it's going to go up. Yeah, break that and then come back down. Come back down a bit, and no, you can't break that swing low. You can't break
No,
that.
no,
Number
yes,
two
You
also.
can't break that. Yeah. Very important. And then it's got to bounce up a bit, and that's it.
It's here,
All this one.
Show before, yeah. Just a bit.
Just
Yeah.
before.
That's it. Very good. Yeah.
It's going down, we should start.
2 press. 2 is like this one.
Yeah, if you go, no.
So variation 5 is just
But
there's one.
Oh,
This one is
variation
short.
Yes.
So basically like this.
Nice one. So, lovely.
So you mean long, right?
I like
So it
that.
must be a downtrend before,
That's
goes up,
2.
and then it comes back down,
No, you have
and then
to,
it bounces up a bit. So,
there has to be a lower high before.
4 is just.
Lower high.
Yeah.
Oh, it's just simple.
Oh, like this. Right.
You.
Yeah.
And then the long.
On the 2.
Okay, so who has completed?
I completed it.
Okay.
Yeah.
Okay.
So you have to draw them
So
now.
that's good. So
That's
1,
good.
that's good. Variation here, 2, that's good. Variation 3.
You mean like?
What am I?
Yes, yes,
Alright.
Variation 2 a bit more. You have to show a bit more.
So variation 3, alright.
Variation 6 very
Press
good.
you could do.
yeah,
Variation
comparison, yes.
5 is going to be off because remember we're going long.
Oh yeah.
6.
Yes, Emma.
Yes.
Let me see.
Cool.
This is not like the Specsavers test, is it?
Yeah.
Oh, I see. Three measurements.
Let's see how this side of the room did. There's like a great effort, yeah.
Right, can I look now? I can look.
Oh, yeah.
I'm not gonna check it.
Okay, yeah, that's all okay. The only thing is, when you draw your variation line, you don't need to break out yet, because remember, you're showing it such that when you're going to enter, so it's going to be before it breaks out. You understand what I mean?
Yeah.
Yeah, so everything else is fine. This one is okay, but you just need to show a diagram of variations before it breaks out. Just draw the line.
Right, the entry point.
Yeah, that's fine, that's okay. This one doesn't need to break out. Doesn't need to break out.
I've actually got 3 wrong.
That's alright. This one needs to be a bit more clearer. The swing low is going to be a bit more
Yeah.
I know that.
So the 3 I got wrong. So number 3 I've got wrong.
Thank you very much.
You've got what? Okay, it's wrong.
The 3, yeah.
Wow. This is all fine.
So I've got it going up, but it should be going down.
This is variation to it.
More than uptrend.
Yeah.
See the difference?
Oh, yeah.
Upward and lower.
It should be the other way. I had it
Yeah,
going
yeah,
like
yeah.
that.
Should be lower, yeah.
Then it breaks out
External body
lower high.
compression. Lower high.
No, right,
So
exactly.
it's got to, it's got to do it. No, you see, you're not something wrong here, because you've already broken.
You just the other way around.
You cannot
Go
break
all
it.
around, yeah.
Alright.
You cannot. It's basically this, but it just keeps compressing. This one 6 is fine.
Actually,
And then you go.
all I have to do is, okay. All I have to do is, look, all I have to do is change that. Alright,
This is all.
That's it, yeah.
then that's what it's about.
Yeah.
Is it?
Let me see your variation 6 on the appreciate it. 6.
Oh,
This is the entry point.
yeah.
So we can have a
So uptrend, the higher, lower low, and then it goes,
It's the high high.
yeah.
Yes, it's on your Dropbox folder. It's under the dynamic breakout Dropbox folder.
Makes sense.
And the description is
And then
PV trend variation.
Okay, variation.
Stephanie can show you where it is. You know where it is, right? All this trend variation.
So it's broken,
The lower high.
yeah.
Lower high.
Okay, everybody done? Okay, that's good. I think it's almost time's up. If some of you, for the last part, just very small part, is those of you who want to go on the charts, go on the euro dollar for this year and find the first variation for dynamic breakout.
Euro dollar, yeah?
Yeah.
Variation.
You get those of you who don't have laptop, you just share someone.
What do
You can share some. Just take the file. Just application.
That's what I'm saying.
So you're looking for a variation 4 setup, the first variation 4 setup for euro dollar this year. Those of you, how many of you got the swing low and swing highs on your chart already?
Got what 4 is?
How many of you got the swing low, swing highs on your chart? You have it right already, yeah? Oh,
Yeah,
oh, you have the swing high, swing lows on your chart, right?
yes.
Yeah. Because you uploaded a template before, isn't it?
Oh, no, I haven't. Do you know I've never done it?
Ah, I think you have uploaded before.
No.
I'll do it for you now, it's very simple.
Oh, please, yeah, that'd be great.
Just bring up the euro dollar chart, the daily time frame.
First variation.
Mine
So,
don't have it, because mine
Oh, you have it.
doesn't.
Oh, really?
Yes.
I don't know, it depends how many times you use it.
so looking for variation 4 going any direction.
Long, let's go for long.
It has to be long.
Okay, so just, don't you have a clear chart?
That's the way I like it with mine.
This chart, your chart is, wow.
It's my level, it's my breakout.
Strategy.
So,
that
high.
Only.
On the 19th.
Dynamic breakout.
You don't have your, what is this, view?
There.
approval.
So,
You don't like the one.
Yeah, because it's on it. Okay, then.
Oh, let's do the and then, if
19th of which one?
If you want to load the templates, yeah, very simple.
Oh, yeah.
So go into your Dropbox.
Which one's the
High low.
Which one is the Wi-Fi? Is it this one?
Variation 4.
Can you minimize it for me?
Yeah.
Can you just open up the Dropbox folder?
Yeah.
It's not working.
Yeah, it does.
Is it September 16?
This one?
September
Have you got
16.
password? I've done it
I
before.
know. What do we do? Look for
Find the
variation.
first variation for long.
I know.
First for this year.
But here it plays up.
First for
When I'm at home on 5.
There you go. Open it together.
Yeah.
Slow, you know, just text box programs. Taking a while.
I mean, the one on there.
Oh, you don't have it?
No.
Boom.
That's it.
Yes, fine. We can close the app. We'll connect it back.
Great, thank you very much.
How do we answer your question?
Okay.
Yeah.
Let me just check the LTR.
Okay, so first, until the 19th, yeah?
No, that's I thought any variation uptrend is
Uptrend,
at
yeah.
the beginning. I don't know how to answer the question. When do we entry or what?
It was the first version.
So something here. So
Yeah.
I'm going to get
How do we answer
Okay.
Yeah.
This, well, this is variation 4.
Yeah, was it on the 19th?
and then you just stick up.
Yeah.
Yeah, I think
I'm
so.
very
Is-
right.
What was the date you would set up?
Movies.
But that's not
Set up.
variation 4.
This one is movies.
This is variation 4.
No.
So we'll just take that
Variation
from there.
five.
You
This
go
is
to
4.
and we're going to continue.
Check.
So all you're going to do now, so since you know where it's
No,
located,
look at this
go
one.
back to your chart,
But from here.
right?
Yeah, but look at
Right
the
click, switch it to, right click, go to
But we're
template,
uptrend
go to
here.
load template,
Higher high, higher
Find the
low,
file.
higher high.
But remember that on
Is
the
this a new day?
variation 5, you have
yeah,
on
your
the
chart.
downplay already.
Right click?
Right click,
Yeah,
load
like
template.
this is downtrend.
Load
See, I've got my own here.
Yeah.
So I click my own.
But this is downtrend.
You go to Dropbox.
This is uptrend.
But no.
Go to
What I'm
LTR
saying,
started.
this is variation 5.
LTR,
It's not variation 4.
LTR
No,
getting
this is
started,
variation 4.
setting up into 4 charts, templates,
Templates, and Google.
and then
This
go
is
to
variation 5.
I know this is very, if you look
How-
at this,
how-
this is variation 5.
No, wait,
But
wait, I'll show you.
this is.
Then, once you go to Eurodollar, you
Okay,
choose
so
the one
what
that
is
they
variation for?
important, don't go just the 4.
Variation
Go ahead.
4.
So,
Yeah.
where's
Eurodollar
the,
daily,
where's the first,
And then-
where's your high, low,
match up.
higher, low,
Okay.
higher, high? Where is it here?
So you
This
go
is
to
the
all,
high,
Where's
lower,
so you just go to
High,
2014,
lower high,
and
Lower
you
high,
basically go to tell me,
higher,
this is lower,
yeah,
high,
lower high, sorry.
high,
maybe
low,
because in that template I haven't loaded the.
high, low.
So that's
Down
what screw
below.
will be.
So I tell you what, do it
Yeah.
for 2013,
Now,
tell me
Yeah.
which was the
Wait,
first variation for.
Okay, this
I think
is
some of you may not have the,
low,
do you have the CNC? You will have.
I have.
So why do we just do 2013? Some of them. 2013, the first variation
First variation.
for breakup for long, and for short. So let's do one on each. Yes.
So you're looking for long.
Yes, you can put
But
looking
that
for
is
long.
some-
Ah, right, okay. That's
Okay. Who wants to teach? Okay, I've shown you all how to do it, right?
So
Can
this
you
is
help
beginning
Mr. Hassan
of
put it
the.
on? Mr.
Yes.
Nat, will you know how to do it? Will you know how to load the template? You're not sure.
Don't show you.
Okay, who is confident here?
Me.
Okay, why don't you just? And I'll be here.
Yes, I've got a play with
From the beginning of 2013 was the first,
okay.
this is, January,
You know you got the 4.
so this is,
Whoa.
4 pairs.
You need to
Sorry.
6 grades.
Can I have a look at that?
Yes, 6 grades, that's right.
So this
You
is
can say that wasn't any of the others.
Is there a reason?
I asked.
Oh, the reason is I think
Because I do my research.
lift
I need him to draw.
one of the senior clients is tested 14 countries,
The low,
and then we just stuck to
higher
6 after because of the results.
higher,
Oh,
higher.
it's supposed to be
But
so.
this is like
We just stuck to 6 and it's easier to gain them out, so that- that's the same image.
Okay.
This
Have you
is
got the higher?
I don't have to.
So,
higher low.
It's full.
so that's very
I
good.
think that would be the first one.
No, this is 2012,
The
yeah.
thing is,
Right click,
which is Dropbox.
just right click.
Oh, right, okay, right, templates.
So here,
Have you got Dropbox here? Have you got Dropbox?
If
If you
you
install?
if you bring
the team.
You don't have?
I have.
no, this
I need
is
to go to internet.
Okay,
one,
that's fine.
But if
1, 2, 3, 4.
Well,
you
This
can enter it,
You know something.
it's not broken, so we agree.
Then you go to
It's not high issue.
yeah.
So when, basically it's like this, when we do when I'm doing the research. This is the same part, but with the programming.
So you must download your computer.
One,
That's the thing.
Yeah, you have to download.
That's the thing.
No, you can
This
just.
is,
The session is the first application.
Already,
so,
You don't have it, huh?
so you
You
can
have
see
Dropbox.
higher high and higher goals. And then
Just share with someone else.
up to this point,
Yeah.
this
One,
higher
you're
goals,
setting
this
it
is
in
where
one
the
laptop,
device
one account.
okay.
So we
You have it in all devices.
That's how.
You can do it if you want because the Dropbox can be shared.
No, but in your file, I have my first account.
Oh, by.
And then this is in my iPod,
Yeah.
on my laptop. It will be clear on all devices, or I need
Yes.
to do that.
Entry here, stop close here.
Can you
You
do?
can do it.
You don't need to.
Yeah,
On the
so
browser.
I go long, but my entry
You
is
go-
stop close.
You can download the
Entry
file
stop
into the
close
desktop
target.
and then upload the template.
Why would you start your?
The variation code that you're into.
First May.
I don't even know where.
First May.
First
Sorry,
May,
sorry.
along.
Yeah.
What have you all got then?
Sorry, I was doing something.
Next has already got it. What's the date then? The
What did you?
First of Feb.
first of Feb you got.
It's the highest.
In 2013.
2030.
First Feb. The
Ah,
first
the-
variation for.
Yeah, it's the
First
highest.
variation for breakout.
But it didn't trigger.
You mean the latest?
No, I want the one which triggered of course.
Ah.
So you wanted long.
Yes.
Okay, so no.
2013.
Fine again.
Final late years.
Yeah. So higher.
Yeah.
You start from here, right?
No, but this one triggered already. No, it's the other.
Oh, we want. He said you only want
Oh,
up
only
three.
offline, sorry, okay. Only offline. Only offline.
Yeah, only up to long.
So we have to trigger from when it breaks this height.
Yes.
Okay. So no, it went down.
Yeah, that is a Dropbox.
Oh, yes.
But see, so look, it's broken here.
Team.
No, but it
But
just
it
says
changed
variation
it.
file.
Yeah,
Got it.
yeah. So it's already.
So you did.
No, that's the Dropbox I can get access from.
Yeah, just go back again. I'll keep some.
Okay, 1, 2, 3.
So
So
can
we
you
wait
go
for the
for
break
the,
of this.
Are you going to download it into the computer?
Oh, right.
No.
That's many.
That's the one I haven't done.
So don't click on that.
That's many.
So go, where are you going to?
No.
LTR.
Okay, we'll give you a call.
You sure?
Hey, we have one.
I'll take it.
This one. September 17th.
Yeah.
You get that?
I've got one in December.
It's not already.
When I go back to the point in time, it always see that it seems back to the present moment.
Yes, make sure you.
So I'm looking at
Now,
2013.
look at the
And then
web
just
itself.
Oh, okay, okay.
Just reset
Press this, and
Second
go back
one.
now, go back now.
This one?
Does it come back?
that stops it, does it?
Yeah, yeah.
No, cancel this one.
That's it.
Okay, now you go to.
No, it's not, still does it.
Do you have to highlight?
Is it coming back?
Yeah, I think so.
Yeah, it's still got it.
That's it, very good.
Right.
Go down,
No,
is it
no,
on the-
Oh,
cancel.
they moved
This
that
one, yeah?
That's it.
Okay.
Click on it, click on it again.
Okay.
Daily.
So if we look at this,
Down, down.
boom,
Ah,
lower,
right.
lower, higher.
But you click it, then
That's a higher. One.
It's downloaded here, so now
This would be
just
Yeah.
minimize this, just restore it. Just
Yeah.
click on the screen, yeah.
So we ended
And,
at the
minimize
beginning of the
the
higher.
Yeah.
Minimize this shit, this one, on top.
But you don't have the,
no.
Okay, great. Now look at this one.
you
This
use
is actually
magic
because of this.
circles.
Yeah. What's the master market's algorithm? That's what we're trying to figure
That's
out.
what I want to ask.
Now you can minimize this.
So how do you get it?
I asked
So when you
Come on, go back
not
to
show the charts, it will
Just
come
look
up
at
on your.
that's it.
No, I have
Right.
to ask it.
Oh, and this,
Yeah, so he saves it in a template,
Ah.
when I load the template.
Oh, you have to load the template and then you get. Okay.
Yeah, so I don't have the latest one.
oh, yeah.
So you doing lift off, break out.
No,
Price
not really.
runs.
Just starting to do the research,
Okay.
but I'm doing some research on the breakdown.
Oh, okay.
So that's why when he was saying.
Okay, great. Okay, so you got it. What's the date then?
I have a different.
So what's the date which went long?
Say again?
What's the date when it went long?
December the 11th.
Then it's 2013.
Yeah.
Okay, that's.
Yeah, just look.
And you?
Because of,
You know.
yes, yes.
No, what was it?
Especially if you've done.
17th of October.
Okay. You've got 1st of May.
Yeah.
You want a higher high and a higher.
No, basically the first trick that we got on
Yes.
on a variation call. They broke on.
But he doesn't have the,
Just keep me on.
Yeah, you have it on yours,
He doesn't
right?
have the algorithm.
Okay, but you have it on yours. I see. Okay, I think
My
when you go back,
on the internet.
just give me a minute. I'll just close up everything. So I think that's pretty much it for today. So go and
Yeah.
of course go through the notes. Do you all know where it is?
Yeah.
The trend variations, the DB. Yeah. If you all don't ask around, I'll ask me next one. Now last part. Any final questions before we wrap up? Anybody? Any questions at all?
What do you think? What do you think is going to happen in the next couple of months for the market? So we're seeing quite a lot of trades at the moment. What do you guys that's going to be sustainable in the next couple of months, or?
My answer is always the same. You know, as long as according to my system, if there's a trade set up, I'll take it. If it's not, then just sit back. That's all.
Just thinking, some of them are reaching their highs and lows.
Yeah.
At the moment, a lot of them.
Don't make any judgment. It's just
Yeah,
if you go your
exactly.
strategy, which is based on the concept, just got to age. Forms set up, take it. Doesn't, don't take it. If it needs optimization, then start researching. That's all. Anything else?
There was one thing with the, I only just started using MT4 demo, and I put in, for volume, I put 9 instead of 0.9.
Oh gosh, great. Oh man, did he go in your direction?
No, it was coming out my direction,
Huh?
but I cut my losses, but it went further down. This was
Doesn't matter.
We're lucky it's
no,
demo.
demo, exactly.
Yeah.
That was- I didn't know that, but now I know. Yeah.
So you just got your losses quickly.
Yes, I did.
No,
Yeah,
it's
but I
fine.
should have done.
Was your heart racing?
Yeah. No, but I should have done because yesterday the pound went up and then went back down again.
Yeah.
So you were looking to go down, yeah?
Yes.
But you came up with a small loss.
Yeah,
That's a
exactly.
very good example, isn't it? What would you all have done? If you all knew that you basically all he's saying is instead of putting 90 pence, okay, something like that,
Yeah.
he put $90. Yeah, $90 away.
That's a pit.
What would you all have done then?
close to break.
Cancel it.
Close it straight away, some of you, okay, well you only realize it, let's say 1 hour later.
Oh no.
But 1 hour later you open up the thing and it's like, what the heck, right?
going against me.
It was going against.
depends.
It was going against you a little bit
I
away, but
closed it.
only one tip like that. So he would close it, what else would you do?
You can maintain the strategy.
Maintain the strategy, okay, but
But
his strategy already flawed because he puts, he put the wrong, wrong volume already.
Yeah.
So what do you do?
Close.
Close it.
Huh? Some people close it, okay? Bila?
Wait for it to turn and then close it.
Wait for it to turn and then close it, but when? Maybe it keeps going up, then what do you do? Then what do you do? Close it, Bila? What do you do?
Play the losses.
I do lessons. You will assess.
Yeah, but you could make, but could you make it's going against you? $270, $450.
Reset, close and reset the study.
Okay, that's good, yeah, Stephanie, what would you do?
Reset. Get out.
Get out, yeah?
You know, I lost 700 pounds on night.
But
So you see,
So what happened?
I'll tell you exactly what
Instead of
happened.
putting the,
This was an intraday. This was an intraday trade.
Ah.
So I was in front of it all the time, looking at it. And if I'd left it, I would have been made. It's a 50,000. I would have probably made about 10. Not 10. It wouldn't be that much, but it would be. Yeah, it would be 10,000. Yeah. Now,
You would have made 10,000.
You would have made 10K.
if I just went to work and just left it.
Maybe with it,
How would
demo.
The demo, of course, yeah, it's a demo. But
How much did it go against you before you made the 10,000?
it went against. You can see it actually on. If you look at the daily, you have to look at the daily.
But you see, the point is, of course, all of us, especially those traders who have traded before, we know all the similar experience because I've done it before as well. Put the wrong figures.
Yeah, never do that again. Now.
And it's crazy. But the point is, as soon as you know it's a mistake, I've learned from experience that you totally close the trade, you don't care anymore. It's a wrong trade.
Yes, that's
right. You don't care whether it goes 1,000 pips in your favor or not. You just close it in your
That's
favor.
that's
But there's two choices you can do at that point. If you have put $90 a pip and you're supposed to put, let's say, $9, and you can then exit $81 of your position, therefore you're taking $81 loss, right, per pip, and then you're leaving it as it would have been left at $9 a pip.
Oh yeah.
Oh, but if your mind really freezes, then you totally close it all together, and then you can put a new trade altogether.
Yeah.
With the
I know what I did now. What I did is stop loss. I brought the stop loss down.
Oh, right.
So
Okay.
it stopped me out.
Oh, right. Yeah.
So it stopped me out for about 1,000.
But you
still
shouldn't.
further
Yeah.
down.
You shouldn't do that because then when you're really sending a signal to your brain is that you still want to have hope of catching a bit more.
Exactly. That's what it was. That's what it was.
Yeah, you don't want to have that. You
No.
just want to follow your system systematically.
That's right.
Any last questions? One more. That's a very good.
Yeah.
One more last one. Anybody?
With the trading stop losses, right? There was a situation with USD CHF yesterday. One of them, when Rishi said to trail the stop loss, but it was also very close to hitting the stop loss, and it was actually quite tempting to just give it space to see how it pans out.
Yeah.
And that actually worked in my favor for the USD CHF, where maybe this was the right thing to do, but I increased my risk because I believed that the overall trend was going long. So yeah, I increased the risk.
Yeah.
And
What do you mean by increase the risk?
so I put my stop loss down.
You moved it
I
down,
moved it down from 0.5 to about 1.5.
but you're going up.
And it was
This is
going
a
up.
long trend.
Yeah, it was going up, but it was going down at the time. And so I gave it more space to breathe, and it's actually gone back up now.
Yeah.
Because I noticed that it did at one point before go below the 20 moving average, but not too far below it. Always bounced back, so I just put the risk a bit.
So what do you think on reflection? What should you have done?
Just maintained it, I guess. Or well, I don't know.
Yeah, there seems to be.
I don't know.
Yeah, there seems to be a conflict, isn't it?
Yeah,
In your
yeah.
mind. Should I have done it
Yeah,
the right
yeah.
way, or but at the end?
I have a
But,
question.
no, but then you know what?
If it
At the
went
end,
down, you moved it down.
Yeah.
It went down a little bit
Yeah.
again. Would you
Yeah.
have moved your stuff
I
down?
don't think I would have moved it further down the top line.
so basically, you see, there's a bit of conflict here, right? I've done this before as well. I also have moved my stop loss before. In the beginning, when I used to train first, too much. Because why? The conflict is because so hardly ingrained in your psyche. You cannot stop this. This is how we've been conditioned, all of us. We want to win.
You want to be right?
Yeah, we want to win,
You want to win. Who wants to do it? You've been taught ever since young to win. Then suddenly there is this new thing called this trading, which suddenly says that you can actually accept your wins and still become a winner in the end. Right? Your wins and your losses, your winning and your losing trades can be even equal, but you can still become a winner in the end.
Yes.
In the end is the point, right? Let's be very clear. In the end, right? So you want to be a loser as of today, this particular trade. But in the end, as the trades build up, then you can have a net profit if the wins are as twice as much as the losses. But however, because of your very hard conditionings, all of us have been through. School, academia, everybody telling us, and teachers, parents especially, oh, why didn't you win that top boy in your class, I expected you to become the top student, You've disgraced me now, you're the 10th in the class, Again, so what? Imprint, right? Loser already, no? So very strong conditioning there must change because in this game is different. In any investment, it's the same as well, different game. Then the second thing is that our conditioning, the second part of the conditioning, which is so strong. So the first part of the conditioning is you want to win, cannot accept losses. Second part of the conditioning, which is so strong, which is that I need to profit, right? And the second part, which even more than that, is always the nature of when you've trained it towards looking only short term only. The first one is that you have to win. Second thing is, the first conditioning is you must win.
Yeah.
Second thing is, you condition it to only look at short term only. So the mind, you see, every single thing that exactly what Eamon said is only about one trade only. Everything he said was only about one trade, that trade only. Never did he say in this statement, if I kept doing it for every single trade, for the next 100 trades, how much would I have got? That's the second part of your conditioning. So all this, so many years of your conditioning must not unwind, right? And you must then reset new ones. Then that will set the foundations for wealth creation. Which is the same qualities that every biggest investor that you see on the media or whatever would have. So first thing is, must accept the wins and the losses. Second thing is, must keep training it to look for the long term, not short term. Most of the 90% of the society is always short term. Oh, I'm in a job today, I'm stable today, it's good. Stable. I've got a stable life. Oh, I'm getting a high pay today. Never think about 40, 50 years down the line. Then suddenly when the pain hits at 50 years old, 60 years old, knees give way, cannot go to work anymore, right? Let's start thinking, maybe I should start looking into some kind of investment opportunities. Never plan. No long term. Big part of your psyche, short term. Two conditioning. So you always looking to win. You want losses? Yes. Second thing is the conditioning, which is short term. So remember that. Work on different ways. There's so many different techniques to overcome that. And that is why we always partner with all these guys that you've heard with, like Escape on health and all that. Motivation, transformation coach as well. Elliot as well, how to succeed, like they go through all how to remove our limitations. And not only the guys over here, throughout the world, there's so many speakers and so many YouTube videos, especially the advent of internet, there's so many tools and solutions for you to overcome this two type of conditioning. All it is how much do you want to change it and how much do you want to change it fast. Okay, that's good. And that's the wrap up of all the questions. I've covered everything. The topic, dynamic breakdown, with the application, and third class Q&A. Just the last announcement I want to make is, the next event that's going to come up? What is the next event that's going to come up?
Traders Open Day.
Traders Open Day, that's right. Yeah, Eamon acted in as well. I don't know if you all have seen the video.
Yeah, show cameo.
So those of you who haven't seen it yet, it's Traders.
Yeah.
So you can go to the website. So Traders Open Day, tradersopenday.com. You can then go and look at it. If you want to register for a ticket, use our promotional code Todd email. And once you do Todd email, it will discount the first ticket to free. So it's £97 ticket, you get it for free. And the next one, if you want to get a VIP ticket, it's just £20. Gives you large VIP bonuses. Give you a VIP bonuses. We're giving all the DVDs and books from all the speakers in the goodie bag.
Nice.
Yeah. So and also it gives you lunch, and then it also gives you priority seating in the front as well. Yes. So the speakers will have lunch along with you as well. So basically, it's all the training. If you use that discount code, I think it gives you £97. So yeah, so Todd event tradersopen.com, 25th October. We're having 4 speakers. I don't know if you all do know about it or not. Yeah. 4 speakers. Where are the 4 speakers from?
This man?
The 4 speakers are from where? Do you know, Stephanie?
From the UK.
Yeah.
I wish I said.
Yeah, one for commodities, that's right. Share equities, yeah. Forex is us. And then finally, the most important thing,
Quality.
Huh?
Psychology.
Psychology, that's right, trading psychology.
Not property.
Yeah, very interesting. You know, Steve Wall is going to talk about trading psychology. I mean, he's very well known in all the hedge fund areas and institutions. Basically. He's written a book called High Performance Trading as well, which I have read, which he has signed before, but 3 years ago, when we all had dinner together with some of the traders. Really good book as well, really well written. So he's also going to be talking all about that. He's also going to give his goodies away as well on that day. So awesome amount of guys. David Paul, who's going to speak on equities, he's got wealth amount of experience in institutions and banks. 15 years consulting Barclays, and another also 15-20 years overlapping into consulting for Standard Chartered, one of the biggest. That's very good. Yeah, he's got it. High performance trading by Steve Wall. Really good book, by the way. Really nice quotes and everything. He's really put a lot of effort into it. And a lot of very, very amazing questions in there that you can also plan your trading routine, go off to your psychology. So incredible talk. That's so you guys really lucky to have that discount. What happened? The email that gone out today, I will tell you, is because of the Surgeons exhibition that we did, we had a large amount of interest for Traders Open Day. So we have got like over 500 people already registered now. So therefore, we only have a limited amount of tickets in terms of the free ones. But then of course, if you all want to take the VIP, then there's another like 15 more, like something like that. People are always starting to take it up. So if you got friends as well, so bring them along. I think it's good. That's the whole concept of open day basically. It's like a university open day. That's all it's about.
Cool. You can offer them the same.
Of course, just tell them Todd email and then it's fine. You can just put it in the promo code.
It's a nice general.
Yeah, but just send them the same link. They give them the discount. I'll show you right now.
I'll give you 3.
Okay, we'll do it right now. Don't worry. Yeah, you okay? Yeah. You're going to be here? 25th or no?
Unlikely. It's a weekend.
It's one Saturday.
Yeah, it's going
All right.
25th of October. If you check your calendar, you can I'm sure it's either Friday. You might be. Okay, that's pretty much what we are. So,
how's your trading going?
Yes,
No,
but
we're gonna start doing to us.
We're gonna start
Doesn't
I
matter.
haven't released the agenda yet, so I don't know. Yeah.
So probably have to, I don't know.
You can talk to after lunch.
Yeah.
So
So, nice to meet you. Yeah, likewise.
I'll show you. Just go to traders.com.
And based on this
Yeah, pleasure. Always.
And if it works out for $0, we have
It's the best of them.
other factors.
It's the best of them. Yeah, it's
Test and then like, oh, and then.
Part of the reason
It's
very serious about it. How do you
Nice to meet you.
Yes, that's right. Yes, yes.
I have a question. No,
I never really looked at the spreadsheet. I said it
but then I
Yes.
go.
2 days ago. I didn't know this one.
So, I just recommend to my friends
Yeah.
not to go out.
Try still report.
Mr. Do you have a friend's detail?
How are you doing, sir?
I didn't see it. Well,
At least you got it, right?
But I don't think it's
I didn't go to
So why this one? Why not this on this?
Yeah, and your friend details are different. You try to see. We can just log them in and they're gonna come again.
So why did you need this one instead of this one?
Why
This
did
is this is
Start with
Your
my
own friend name, just name, email address.
Yeah.
and then it's just a program.
Yes.
Why is it-
Install it and download it to desktop.
Oh.
Everyone
That's
else
what
does
people can
that. How are the kids? Yeah, good.
Unless there's a slight variation of the different.
Let me go for
Something
something.
the same.
Because we did a couple of lift ups that were
Oh, I
very
see.
low
Oh,
frequency.
Yeah.
They used the spike, it didn't actually close up. As
Yeah.
it goes low, they used the spike.
Stuff.
So you need to plan.
Is there any new ones?
There is.
No, there you go.
It's really good.
As soon as that's done, then it will work.
Oh, yeah, no.
It's less done, but when we update the file next to it.
Yeah, yeah.
It's notification.
You're the-
And
So, oh yeah, it hasn't.
So we
My
can get
phone has no batteries.
no, yours we have, your friend name. Your friend name.
That one, that's the name.
Use this one. Use the one.
You use the same
This one,
Yeah. Yeah, use this one.
The telephone number you
Nice.
Once,
I
yeah.
don't know by heart.
I didn't do. No,
It's okay, no,
But you give me your name, I will
Yes.
send it.
And they don't take long to do, but I
That's
just.
when you close it again. And then
These
these changes
changes
is
activate so that we had.
See, I have my own spreadsheet.
Oh, we had
So
the
I
imaging
should
the
my-
surgeons, doctors and dentists.
This is my
and the NPS.
So I put the dates delivered, which make clear.
Oh, right.
Yeah.
Yes,
Dates
you
activated.
did that.
Yeah.
Big bit. So, yeah, it was in the.
Oh my god.
So
Sorry?
if I look
Oh,
at the
right.
numbers, 12,
Yeah,
One
I
to-
did the
one
big
to
thing
six
myself,
to-
actually. Yeah.
they should coordinate
Yes.
the lower.
But yeah, so because he's picking up all the admin from that. So,
Yeah.
he's just been, but I'll remind him, because I did.
Okay, so
that or?
It's my fault, I checked it on the street, but I.
Yeah, video that I have to watch to understand how this spreadsheet works.
So the break.
How do we get this?
I got it by, I think he did one. You have to actually do that.
How many friends you want to bring?
There is.
Eamon, look at this guy, he's fabulous. Look at his hair. He looks
It's brilliant, your friends.
I forgot to give Alan a shout. I just took it. I remember.
Oh, you see it now?
Yeah.
And the last,
We presented
Yes.
on the Eurodollar.